Picture this. You walk into your bank thinking your money is safe, growing quietly in the background. The teller smiles, the building looks solid, and you feel secure. But behind those marble floors and friendly faces, something else is happening. Your money is working, but not for you. It's working for them. By the end of this video, you'll discover 7 ways banks quietly drain your wealth, and more importantly, exactly how to fight back. When you hear about the 5th way, you'll understand why your savings account feels like running on a treadmill. You work harder, but you never get ahead. Most people trust banks completely. They believe that depositing money means protecting it. But here's what's really happening. While you sleep, banks use your deposits to make massive profits, charge you for the privilege, and design every product to keep you dependent. They understood something critical. Confusion is profitable. And here's the beautiful part. Once you see these tricks, you can't unsee them. You'll finally understand why the system feels rigged. So let's start with way number 1. The average person believes banks exist to help them save and grow money. They think interest on savings is a gift, that fees are necessary, and that loans are opportunities. But here's what's really happening. Banks are businesses, not charities. Every product is designed to maximize their profit, not your wealth. While you earn 0.5% on savings, they lend that same money at 20%. The gap between what they pay you and what they charge others is where fortunes are built. Their fortunes, not yours. So let's start with number 1. Inflation quietly destroys your savings while the bank profits. You deposit money thinking it's safe. The bank promises interest, maybe 0.5% or 1% annually. You see the balance grow by a few dollars each month and feel like you're making progress. But you're not looking at the real numbers. Inflation runs at around 3% per year. That means the actual value of your money shrinks by roughly $30 for every $1,000 you hold. Meanwhile, your interest earns you $5. You gained 5, but lost 30. You're down $25 just by trusting the bank's promise of safety. Here's what wealthy people understand. Cash is a liability, not an asset. They keep minimal amounts in banks, just enough for emergencies. Everything else goes into investments that fight inflation. Real estate, stocks, businesses. Things that grow faster than prices rise. Challenge yourself. Calculate how much purchasing power you've lost over the past 5 years. Then ask if your savings account is really protecting you, or quietly bleeding you dry. Number 2, banks create money from thin air and charge you interest on it. Most people think only governments can create money. They imagine printing presses and strict controls. But here's the trap most people don't realise. Every bank legally creates money every single day. Here's how it works. You deposit $1,000. The bank keeps 100 as reserves and lends out 900. But when you check your account, you still see the full 1,000. Meanwhile, the borrower sees 900 in their account. Suddenly, there's $1,900 in existence instead of 1,000. The bank just created $900 out of nothing. Time after time, people discover they're paying interest on money that never existed in the first place. Banks multiply your deposits across millions of transactions, then charge fees and interest on the illusion. You're not just being charged for borrowing money, you're being charged for borrowing money they invented. Think about what this means. The entire system runs on a trick, and the moment enough people realize it and demand their cash simultaneously, the whole structure collapses. But before we get to number 5, that reveals why you feel stuck. Let me show you way number 3. Credit card interest traps you in a cycle you can't escape. Credit cards look convenient. Swipe now, pay later. Earn rewards. Build your credit score. Banks market them as tools for smart consumers. But here's the reality behind the rewards. The average credit card charges 20% interest annually. Let's think about what that actually means. If you carry a $1,000 balance and only make minimum payments, you'll pay roughly $200 in interest the first year. But it doesn't stop there. Next year, interest compounds on the new balance. Over 5 years, that $1,000 debt could cost you over $800 in interest alone. Here's what wealthy people understand. Credit cards are designed to keep you paying forever. The minimum payment barely covers interest. Banks profit most when you're stuck in the middle, paying consistently but never escaping. You can pay for things with cash, or use a debit card and actually own what you buy, or you can pay with credit and spend the next decade sending monthly checks to the bank. The difference? One keeps your money working for you, the other makes you work for them. Challenge yourself. If you have credit card debt, calculate the total interest you'll pay over the loan's life. That number shows exactly how much the bank is stealing from your future. Number 4, hidden fees silently drain thousands every year. Maintenance fees, overdraft fees, ATM fees, transfer fees, wire fees, inactivity fees, foreign transaction fees. The list never ends. Each fee looks small on paper. $5 here, $10 there. Your brain dismisses them as insignificant. But banks collect over $30 billion annually just from overdraft fees alone. Think about that. $30 billion taken from people who were already struggling. You accidentally spend $10 more than your balance, and the bank slaps you with a $35 penalty. That's an effective interest rate of 350% for borrowing $10. Meanwhile, that subscription you forgot about charges you monthly. The bank approves it, collects a processing fee, and never reminds you. Those small amounts multiplied across millions of people become rivers of profit for banks and a quiet drain on your wealth. Ask yourself how many fees you've paid in the past year that you didn't even notice. Then imagine that money invested instead of given away. Now, way number 5 is the one I warned you about. This is the invisible force that makes savings accounts feel completely pointless. The rich borrow at near zero rates while you pay premium prices. Here's how the game is rigged. When you need a loan, banks check your income and credit score. If you're struggling financially, they offer high interest rates, sometimes 15 or 20%. They claim you're risky. But if you are already wealthy, they practically hand you money for free. Take billionaires as an example. When they want to buy property, they don't sell assets and pay taxes. Instead, they use shares as collateral and borrow millions at 1 or 2% interest, sometimes even less. On a $100 million balance, the difference between borrowing at 2% versus 20% is $18 million annually. You're paying to borrow while they're getting paid to borrow. The gap between what the poor pay and what the rich pay is where wealth transfers happen silently. It's not bad luck. It's the system working exactly as designed. The moment you realise this, everything changes. You stop seeing banks as helpers and start seeing them as businesses optimising for profit. And if you think that's bad, wait until you hear number 7. It's the ultimate betrayal that keeps entire generations trapped. We'll get there in about a minute. Number 6, banks profit when you stay financially ignorant. Notice how schools teach algebra, history, and chemistry, but never explain how interest compounds on debt. You graduate knowing the periodic table, but not how credit cards work. Do you think that's an accident? Here's the trap. Financial ignorance is incredibly profitable. If you don't understand how loans work, you rack up balances. If you don't know about investment opportunities, you leave money earning almost nothing. If you can't read the fine print, you sign agreements that cost you thousands. But wealthy people understand something critical. Knowledge is the gap between freedom and dependency. They teach their children about money early, they hire advisors, they read financial statements, they ask questions until confusion disappears. The gap between understanding and confusion is where banks make their fortunes. Every product is designed with complexity, not to protect you, but to keep you guessing. You have access to the same information wealthy people use: books, videos, free resources. The only difference is whether you choose to learn or stay comfortable in confusion. And now number 7, the ultimate trap that keeps more people dependent than anything else. The entire system relies on your trust, and the moment it breaks, everything collapses. The biggest difference between people who escape the banking trap and those who don't isn't money. It's awareness. Most people believe banks are solid, permanent, and trustworthy. They see marble buildings, government insurance, and friendly advertising. They assume their deposits are sitting in a vault somewhere. But here's the uncomfortable truth. If everyone tried to withdraw their money at once, banks would fail overnight. Because your money isn't sitting there. It's been lent out, invested, and leveraged dozens of times over. The whole system only works because people trust it blindly. Think about every dollar you've given to banks through fees, interest, and lost purchasing power. How much have you handed over trying to feel secure while they quietly extracted wealth? The answer is probably tens of thousands over a lifetime, maybe more. The moment you stop trusting blindly is the moment you can finally take control. You're not just avoiding fees, you're reclaiming power. And over time, that approach transforms everything. Here's what this really means. You're not a customer to banks, you're a product. Every fee, every loan, every percentage point is designed to transfer wealth from your pocket to theirs. And the system only works because most people never question it. You just learned 7 ways they profit while you lose. You see the fees, you pay the interest, you watch your savings shrink while their buildings get bigger. You're told this is normal, safe, necessary. While banks lend to billionaires at 2%, you're paying 20. While they create money from nothing, you're working overtime for every dollar. While they profit from your confusion, you're taught that asking questions is rude. Picture yourself 5 years from now. Do you want to still be paying overdraft fees on money you already earned? Still watching inflation eat your savings while you do nothing? Still trusting a system that profits from keeping you dependent? The choice lives in what you do today. Start right now. Check your bank statements and count every fee from the past year. See the real cost. Then open a high-yield account that at least fights inflation a little. If you're carrying credit card debt, attack it this month. Not eventually. This month. The quiet path of trusting banks blindly may feel safe, but it will cost you tens of thousands over your lifetime. Real wealth means seeing the game clearly, minimizing the damage, and building outside a system that was never designed to serve you. Look, most people will watch this video, nod along, and then do absolutely nothing. They'll keep paying fees, carrying debt, and wondering why they can't get ahead. But you're not most people. You made it this far because something in you knows the game has to change. Here's the deal. Banks spend millions on marketing to keep you confused. You just got the truth for free. Share this with someone who needs to hear it. Your friend stuck in credit card debt. Your sibling who trusts banks blindly. Your parents who think savings accounts are still safe. Spread the knowledge because banks won't. Now I want to hear from you. Which of these 7 ways hit hardest? Drop a comment and let me know. I read every single one, and if you want more content that exposes how money really works, you know what to do. Subscribe, hit the bell, then go take action on what you just learned. Because knowledge without action is just entertainment, and your bank account deserves better than that. I'll see you in the next one.